Hey, what's going on, guys? I get questions sometimes about biweekly mortgages. This video should provide some decent answers. The best way to show all of this, as usual, is a spreadsheet. So why all the biweekly questions? Because there's misleading talk out there from people who are trying to get you to send them money by paying a fee to let them handle your mortgage for you, or selling you a book, or buying their software, joining a club, or taking out a home equity loan even. That all might be fun for you, but you don't actually need it. Let's do the example. Okay, you borrow $100,000 at 4% fixed for 30 years. Very classic example. $100,000, 4%. It's about an average rate for mortgages now on a 360-month, 30-year mortgage. And the required principal and interest is $477.42. So the sheet shows that as you make these payments, the balance drops slowly, the interest drops a little each month, and the amount of principal increases a little each month. Let's line this up with a true 30-year biweekly mortgage. We've borrowed the same $100,000. The interest rate is the same, but how many payments? A biweekly mortgage, by design, is scheduled to have 26 payments a year, times 30 years is 780 biweekly payments. Each of those biweekly payments is less than half of the regular monthly payment because there are 26 payments each year and not 24 or 12. So where the regular monthly payment here is $477.42, the biweekly payment over 780 payments is $220.24. Remember, we're not yet prepaying either one of these mortgages. So, how much interest do you save by paying the more frequent biweekly payments? The left side shows 12 monthly payments over a year. The right side shows 26 biweekly payments. Over the first year, the more frequent but smaller payments saved you $1.56 on your $100,000 loan at 4%. So follow this to the end. 7, 8, 9. We're going down to 30 years. And now you're 25, 26, 27, 28, 29. There's 30. And after 30 years is over, we have saved, the biweekly has saved us $79.67 over 30 years. Not much. Now, the biweekly people know this, but there's nothing for them to sell you if you're only going to save $2 to $5 per year based on biweekly. So here's how it's sold. Hello, Mr. John Homeowner. For a small setup fee and a very reasonable monthly fee, we are going to save you years off of your mortgage loan. That's right. We'll collect half your mortgage payment every 2 weeks, and we will save you a ton of money. Sounds great, doesn't it? So what are they doing? Well, they're taking a whole monthly mortgage payment that may include taxes and insurance, dividing it by 2, and using that as a biweekly payment. So how much are you prepaying? Well, 26 half payments of the entire payment, PITI, is 13 months of mortgage payments each year. So it's not necessarily just principal and interest. It might be an extra month of everything included in your mortgage payment as well. In our example, let's see. In our example, since we don't really know how much people's taxes and insurance are, let's just prepay the principal and interest. So again, how much is the normal monthly principal and interest? It's $477.42. Take one of those payments, divide it by 12 to get $39.78 a month, and send that as extra principal each month. On the biweekly side, the required payment, we already said, was $220.24. But they've taken a whole payment and divided by 2, and they've got $238.71, which is $18.47 more than required. So what happens? We scroll down to see what happens to both loans at the end of about 26 years. So, after a little less than 26 years, both methods paid off the loan. Doing either prepayment saved just over 4 years off of the 30-year mortgage term. How much more did Biweekly save instead of you just prepaying the loan each month? Answer, $147 over 26 years. The more frequent payments saved $147 over 26 years. And there it is. Also, if you prepay 1/12 of your whole mortgage payment, not just the P&I, you'll prepay even more, and you might cut off another couple of years or more from the term of the loan. The summary is this. The biweekly is not what saves you money. What saves money is prepaying the loan. To really get this, you may need to rewatch this. I'm Scott Lucas, and I'm a licensed loan officer. If you need a mortgage loan or have questions, you can call or text me at 443-829-2210, and my email for comments and questions is scott@scotthelp.com. Thanks for watching.